Hello, good day, guys. My name is Nick, technical analyst, SuperForex, and today we're looking at the analysis on the currency pair AUD, USD, Aussie dollars. And first, we'll be taking a look at fundamental analysis before we move right down to technicals, which will be purely what we've seen on the chart. Now, we can say that AUD, USD has been holding steady above the 0.6500 mark, and it has moved a little after the Chinese inflation data. The Aussie dollar pair oscillates in a row, the front row, of course, and expecting some move impetus to correct this free fall that happened a few days ago. And AUDS is seen consolidating following Wednesday's post-US CPI slumps over a week. Now, we are having bets that the Fed will delay cutting rates, underpin the USD and cap the upside for the pair, while softer Chinese inflation figures do little to influence the Aussie or provide any impetus at all. Now, the Aussie dollar pair oscillates in a narrow trading range during the Asian session on Thursday and consolidates the previous day's hotter US CPI inspired slump to over a 1 week low, while spot prices hold steady above the 0.6500 psychological mark and move little following the release of inflation figures from China. Now, the National Bureau of Statistics has reported that the Chinese consumer inflation declined more than estimated by 1% in China in March as compared to the previous month rise of 1% on a yearly basis, while the headline CPI has decelerated to 0.1% from 0.7% in the previous month, missing expectations for a 0.4% increase. Furthermore, the producer price index, which measures wholesale prices at the factory gate, dropped by 2.8% from a year ago, marking the 18th consecutive month of decline and indicating persistent deflationary pressures. This, to a larger extent, overshadows a jump in Australian consumer inflation expectations to 4.6% from April to the 4.3% previous, and does need to prevent any meaningful impetus to the Aussie. And somehow the US dollar, on the other hand, ticks slower amidst some profit taking after the previous day's sharp spike to the highest level since the 14th of November and lent some support for the Aussie dollar pair. Any meaningful USD corrective decline, however, still seems elusive in the wake of the expectation that the Federal Reserve will delay cutting interest rate and sticky inflation, while this, along with a generally weaker tone around the equity market, should act as a tailwind for the safe haven buck and cap the risk-sensitive Aussie dollar, warranting some caution for aggressive bullish traders. So we have seen that this possibly could retrace and recover this free fall that happened a few days ago, and we're expecting nothing less than 67 to 70 pips for this correction to happen, of course, which is good money. And that's our technical analysis on today's currency pair Aussie dollar. Now let's move over to the stock markets. Hi, welcome back, guys. And on today's stock market, we're having a look at Netflix. On Tuesday, we had maintained its equal rating for Netflix, but increased the stock's price target from $475 to $550. Now, the adjustment reflects that the firm's positive view on streaming giant subscriber growth, which is expected to significantly exceed forecasts for the quarter. Netflix is on track to add potentially 7 to 8 million subscribers, marking one of the strongest periods of growth in the company's history. While the analyst has noted that this surge in subscribers numbers is occurring despite the company having raised its prices late last year, and of course, this growth is attributed to the ongoing momentum from Netflix paid sharing strategy, which was detailed in the report being released on Friday the 16th, 2024. Now, we are expecting the Netflix stock to push up following this recent news as Netflix approaches the 1 year mark since the introduction of paid sharing. Performance in the upcoming quarters will be crucial to determine whether other factors are also contributing to the company's growth. Now, having this in check, we're expecting to get up to 636.68, which is a wholesome 121 pips plus from that point, of course, good money. And that's our technical analysis from today's stock market Netflix. I remain your host, Nick. Bye for now.